Well, it is update season. We've heard recently from Bajaj Finance, Indusind Bank, HDFC Bank, HDFC Limited, and there's obviously a lot of companies that are not from the financial sector, a couple FMCG metal companies, and then Titan that have also given their Q3 updates. Now, these are precursors to the results that will be coming in 2 weeks. We know that Nifty earnings are upon us, first week of Jan, so the Q3 earnings will now slowly be trickling in for everyone. So let's see how these banking updates really, compare with each other. So we're obviously going to use the leader HDFC as a benchmark. Now, what's interesting is credit this year domestically is not expected to grow at more than 5-6%, right? So in line with that, we have some banks like Indusind which are growing but are struggling to grow even in high single digits. They're not really able to get there. A bank like Federal Bank as well is struggling to get there. However, on the deposit side, we are seeing very decent traction. So for banks like Indusind, we've seen 10-11% deposit growth. For Federal, we saw 12% deposit growth. And, there is a view that these smaller banks will now also continue to eat market share with respect to their deposit franchises. But the prevailing thesis, if you hear any banking analyst, expert, or fund manager who's heavily focused in financials, they keep saying that the larger private banks are going to benefit, whether it be market share of credit growth or of deposit franchise, right? Well, let's just look at the HDFC update which has just come out. Advances stand at 10,82,000 crore versus last year's 10,38,000 and 9,36,000. So you're seeing 16% YoY growth, 4% Q-on-Q growth in credit. That's very encouraging. They're managing to grow far ahead of the industry. Then you have deposits at 12,71,000 crore versus last year's 10,67,000 or last quarter's 12,29,000. So again, deposits have grown 19% YoY and 3% Q-on-Q. So the CASA ratio has also shown a smart uptick. Obviously, 43% is this quarter's or this Q3 ratio versus last year's 39.5 or even last quarter's 41.5. Nearly 150 bips increase on a Q-on-Q basis in CASA. So obviously, there's no issue for advances or deposit build-up for an HDFC bank. It's significantly outperforming the smaller banks. And that just goes to show that right now for financials, what matters is size, scale, and how many coffers you essentially have. HDFC Bank's capital adequacy is also very sound. This quarter, they've purchased loans aggregating to around 7,076 crore via their arrangement with HDFC Limited. So, pretty much along lines as expected, but it's just interesting to see how even when the industry particularly might not be in the biggest upswing, leaders who have sheer size and strength are really able to leverage, capitalize, and still grow their balance sheets quite effectively without taking on undue risks. So keep your eye out for HDFC. We might just be in for a very positive surprise with the Q3 earnings.